All right, everybody, welcome to Tax Update for Weekly Tax Update for February 23rd, 2024, otherwise known as episode 94. Can't believe we've been doing it this long. Yours truly here in Chester, New York. My upcoming dates. Next week, I will list the classes. We've settled on the classes for May 15th in Las Vegas. I will be at Latino Tax Fest in June. I have not heard what my topic will be. I asked them to let me do a topic on AI. We shall see what they approve. New York, Connecticut Association of Tax Professionals, that will be live only. You have to come out to Connecticut, to Danbury, but I'll be doing Demystifying the Consolidated 1099-B. For California Society of Enrolled Agents super seminars in June, I have 2 AI programs, the use of AI in replying to federal tax notices. Not presented that entire program at one time, so that's going to be a first if you can make it out there. And Weird Science, the ethics program, will be revised for 2024, but that should also be an amazing program if you're around. If you're not a subscriber, please consider becoming one. $52 a month gets you access to all of the content and more. So please consider joining us. Jessica Smith joins us March 25th. When they owe but can't pay. Idea of the program is that we will together discuss tools, even if you don't consider yourself a rep person, for that client who says, "What do you mean I owe? Give me an extension." No, we want to get that person filed, get you paid, right? And we're going to give you the tools to do that. Make sure that your folks that you've gotten the work done actually get out the door. The 2024 nationwide tax forum dates have been posted. Just one more reminder that last year San Diego sold out early and Baltimore ran out of hotel space. I know they resolved the Baltimore hotel space issue, and I think that San Diego got moved. So there will be 3 hotels in Baltimore this year. So the IRS has some new documents available for you. They've updated the Form 1099-K, frequently asked questions, and this is just the top of it. I thought that was an interesting logo, an interesting marketing piece from the IRS. But I think this is something we may use as a client handout. I haven't read through the whole thing yet, because sometimes there's something offensive. You don't want to give it to a client, but I think this might be something we're going to give. And there is a link to this page inside the handouts, the tax resources that we gave you. Speaking of which, Celeste has redesigned, instead of me just typing your resources on a blank Word document, we now have a header and a logo, and this will be much more consistent. It'll be easier to identify which program it came from, and it looks a little nicer. All right, so just some items here. Sadly, sometime today, the IRS will release the February 16th data. They're a week behind, but it doesn't come out first thing in the morning. So as of 10 minutes ago, the revised statistics aren't available yet. So we have to live with this one. So the IRS asks us to keep in mind that we still have 7 less days of filing in this year's statistics versus last year's statistics. Since it's early in the season, these are large numbers, but I would hope that by the end of this month, all of the early filers from both last year and this year will be in, and we can start to see where the numbers really are. Returns received are down 11%. Returns processed are down 4%. They're not focusing on employee retention credits. Remember last year, they were trying to get out, I think, 30,000 or so a week during tax season. They're not focusing on that. E-file returns are down 8%. That's probably not too bad. Web usage of the IRS website, though, is up, and that's a goal that they've wanted. They have all sorts of QR codes and other advertising, if you will, that's supposed to drive people to their website to self-help themselves rather than call on the phone. Okay, so as of today, No change in processing of 1040 returns. They are still working on February returns. They did move up 2 full months in amended returns. They are working amended returns submitted during October, but this still leaves them 4 months behind, probably closer to 5 by the time March rolls around. I think that's where we are at this. Not a good thing that they are so far behind 4 years after the start of the pandemic. It's 20 weeks to get amended returns out. And considering the bulk of them now, 2020 returns, I think were the first year we could e-file everybody. So they really shouldn't be getting paper amended returns much anymore. No changes here on 1120, 941, excluding ERC. They're still working the same work. It's almost the end of February. They're still working the January cases for 941 returns. 1041s are current. They're working on February cases and August amended returns, but big deal. As far as other forms, nothing changed. These are completely static. I had to go back and double check that I didn't make a mistake and repost the same screenshot. And this is the last week I'll run this. All through the pandemic, we had these processing updates with what the return count was, the volume. They haven't updated this since December 9th. I don't think we're going to see updates of that anymore. That's kind of too bad because that was always helpful to understand where their inventory was. Now, I've not heard from any taxpayers or former clients who have called and needed help because, they're on the direct file website. We always get those calls. Can you please help me with insert name of product on the internet product that folks want to access, right? That's not something we're worried about. But I do think we're going to get calls for direct file that they need their AGI from the prior year or some such other thing. And I don't know. I don't know how we're going to handle that. Maybe we'll say we'll give you a copy of your return. You figure it out. Ask your new advisor. So they're going to open direct file to the public in the 12 pilot states without an announcement. It's going to be a short, unannounced window of time. So apparently they have 1,200 people beta testing it. Now they're going to open it up and everyone's going to run in. So the purpose of this, according to the commissioner, the purpose of this phase is to test direct file with the public to ensure it works well when experiencing heavier volumes than the initial testing phase. So I'm thinking this is like John Taffer with Bar Rescue. This bar that can't get 10 people in it during the week, somehow he gets 500 people lined up outside to do a stress test, and everybody runs in. How many of you have gotten your drink? And all the hands go up because, the place, they don't know how to run the bar. I should have put a Taffer picture in here. So then, a week later, he's redesigned the place and the food gets cranked out. So I'm wondering the same thing here. Is Danny Werfel going to stand up and say, who got their refund? All right. New users, though, so what's going to happen is when the window's open, new users are going to be able to log in, prepare their return, start their return. Once the window closes, you won't be able to start a new return, but if you've already started your return, they're going to allow you to finish it. So the key here to anybody that's a maybe or wants to test it out, start your return when the window is open. Does that mean going there every day and pressing F5? Maybe, right? But no guarantees with what they're going to do or how long it'll be open. All right. Taxpayers can check directfile.irs.gov to see if the window is open. This is not the only planned window of public access. No other information given other than that statement. Taxpayers can check back regularly if they wish to try the new system. Again, F5. Maybe we can develop an AI that can go check and tell you if it's opened or not. All right, so I already said the IRS has 1,200 people testing this thing. Some of these taxpayers using the portal have already started getting refunds. Okay, they must not be waiting for child-related credits. The initiative is now focusing on how the portal works with state tax returns. The IRS has said that how will the public engage with the tool, how well it works when experiencing heavier volume. These are the takeaways they want from this test. You would think they'd want to follow the Taxpayer First Act, right, and get the right tax every time. That didn't come up. They just want to know how people interact with it. All right. So the IRS LB&I, and this was funny. I gave this to someone in the office, and they said, "Yeah, but is this really international? Right? Large Business International are kind of just one unit, like leftover stuff. We put them together. They're an operating unit." They released a practice unit. Practice units are kind of like the old audit technique guides. The practice units tell the IRS employees what to look for and how to audit, how things work, some background, and then how to actually do an audit. So that's useful to us to understand what the IRS will be looking for. So they released how to allocate and apportion research and experimental expenses for tax years beginning after January 1st, 2020. That could be great. And this may become a 1 or 2 hour program this tax season. We have not had the opportunity to really examine this yet because it came out this week. And yeah, like you, I'm trying to do tax returns too. What I find interesting is that they mentioned that these cannot be used, relied upon, or cited, which I think is super interesting. It's not official pronouncements, and you can't cite it, but they're using it to train their employees. So that's interesting. Oh, Katie asked a question there. Oh, that's interesting. That may be I wonder if that's a typo on my part. Take a look at the handouts, Katie, and let me know. I handed the handout. It's in the handouts. It's a copy of it. There's an IRS webinar coming up on ID theft, and I think this is going to be useful. I don't know why they chose not to issue CE for it, but this has got some great background stuff. It does talk about the IP PIN program. You know, I switched from Drake to Access this year, so maybe this is showing up in all your software. But Access gives me a diagnostic I have to query every time. The IRS thinks all taxpayers should have an identity theft PIN. I'm like, why are you telling me? Tell the taxpayers. So this is a big thing. So they're going to talk about this. But it's the IRS and the Federal Trade Commission, scams, tax-related ID theft, and identity protection PIN. So I would think that they're going to talk a great deal in that hour about the IP PIN because it's even included in the total. And Ellie is telling us that it is for assets placed in service before 2020. Okay. I'm always willing to be wrong. So thank you, ladies. I appreciate your attention to detail. All right. So registration page is on the resources page. Again, no CE here. That's a CE eligible program. So they must think that 80% of the content is not federal tax related matters, because otherwise I don't understand why they're not choosing to do that. Oh, Congress will be back this week, Monday. Very short amount of time is going to remain to avoid a government shutdown. You know, they were so proud of themselves. They passed 8 continuing resolution bills not that long ago. And they're like, oh, yeah, we're going to have a budget in place. They're out of time. House and the Senate are both out on recess the past 2 weeks, ending today. Both return next week. So Congress passed these continuing resolutions in January that funded 4 appropriation bills through March 1st and the remaining 8 appropriation bills through March 8th. So Mike Johnson, who's the Speaker of the House, needs to navigate the competing demands of both sides here, both sides of the GOP conference, not even the Democrats and the Republicans. He's got the Freedom Caucus that's insisting that conservative policy writers have to be part of any of these spending packages, right? We need these other things done. Other Republicans believe that demands like this are only going to guarantee a shutdown because they're going to get to a stalemate. I want this. I want this. So the majority of the party is saying, guys, time to pass the bill and let's move on. So Speaker of the House, Mike Johnson. I'm sorry, we just said Mike. There's only a little bit of time left, so they may need another continuing resolution to avoid a shutdown. So a continuing resolution is we agree to pay the necessary bills to keep the lights on, right? We don't have a budget in place. We're not agreeing on new law. We're agreeing to keep the lights on. Now, Johnson has said on Politico and a couple of other places that he doesn't want to put forward any stopgap funding measures. It's time for us to pass the budget. We'll see what happens, right? What's the worst that's going to happen? We won't get the IRS on the phone. a lot of lobbying going on, trying to get the Senate to pass the bipartisan tax act that the House passed, God, 4 weeks ago now, almost a month ago. Corporate business groups that included the U.S. Chamber of Commerce, the Business Roundtable, the National Association of Manufacturers, spending money, advertising. It's always amazing to me if you spend any time in Washington, D.C., you see commercials that are geared towards these people and their staff. You spend $1 million on a commercial where you're trying to reach the staff of 100 congressmen or 100 senators to respond. So you've heard part of this before from me. The bill that the House passed includes the immediate expensing of R&D costs, 100% bonus depreciation, and interest deductions. We've said for a year and a half, any tax reform that the Democrats try to get passed, these are the things the Republicans want. They have not wavered from it. You got the Freedom Caucus and some others asking for changes, but these three big planks, right, on their platform are what they've wanted. The Democrats have wanted the enhanced child tax credit. Again, the enhanced child tax credit with a pre-funded monthly advance portion is just a large goal. Why? They count that towards household income. They count that towards how many million children, how many million households they've lifted out of poverty. It sounds like a good political soundbite, but I don't think it can hurt either, putting money in people's pockets. In the past, the government has said giving people a stimulus payment, a large chunk of money. Sometimes they'll go pay a bill with it or save it. They won't go put it into the economy. But $300 or $600 a month tends to get put into the economy and not put away. So this is something the Democrats want to see happen because they do believe it raises household wealth and is better for people overall, better for our citizenry. So as you know, the Byrd rule says if we pass a law, you have to be able to, if you pass something that's going to give people money, you're going to create a tax cut, you have to pay for it with another tax or a change to another cut. How are they going to pay for this? We still have that legislation of that January 31st, 2024 cutoff for employee retention credit. They're saying that anything after that, we're not going to deal with. The other piece is that they're going to increase enforcement on promoters. Now, I didn't do a slide on it, but I did give you a Office of the Chief Counsel analysis because I thought this was going to be too far out into the weeds. But short version, they're saying that some third parties could have liability for repaid employee retention credits. One of those is employee PEOs, professional employer organizations, right? Leased employees. If those organizations received the credit on behalf of their member and gave it to the member, and then there's a clawback, they can go after the PEO. It's very interesting what they're looking to do here. So some Senate Republicans are opposed to the entire tax package because they want to be able to amend it. And specifically, they want to amend it from the floor. Now, one of the things they do, though, if they amend it from the floor as opposed to passing the House version, we're going to send this back to or at least back to committee, if not back to the House to start to revote. So I don't know what we're going to do here or what we'll see. Now, the Ways and Means Committee and the SALT cap. We talked about the SALT cap. So if you remember, to get the bipartisan tax bill passed, a number of Republicans from New York said, yeah, we'll vote for that, but you got to take care of us. Now, the speaker said, yes, I'll let you bring the proposed law on the SALT cap, where they were going to double from $10,000 to $20,000 for married couples, the amount of SALT deduction. If anybody was serious about passing this and not just fodder for political campaigns, they would have attached this to the Bipartisan Tax Act. Instead, it got its own separate vote. Without getting technical, it required a procedural change to bring it to the floor. They didn't even get the procedural change to get it to the floor to vote it down. They said, we're voting down, you bringing it to the floor to bring to a vote. Very interesting what goes on in Washington. So that was a no. 18 House Republicans did not support the rule, and this is within their own party. So we have this is a Republican item they've wanted to pass, and you have 18 Republicans in the House saying, we're not on board with this. So Jason Smith, who is the House Ways and Means chairman, right, the budget guys, got into the conversation and said they're not going to support the complete elimination of the SALT tax because it only ends up helping the wealthiest Americans. Now, I feel bad here. It's not a tax, Jason. It's a limit or a cap. And he got better later. So later on, he says it brings in hundreds of millions of dollars. He didn't call it the cap. I changed that for him, and that's why it's in parentheses. I'm a nice guy. I didn't want to make him look like a fool. He is from the Show Me State. So it brings in hundreds of billions of dollars that help lower tax rates for everyone. I don't think it brings in hundreds of billions, but it does bring in a great deal of money. Blue state Republicans are arguing that the cap is hurting them in their election contests. Now, I want to know, why does that matter? I give them credit for being honest, right? We can't get this passed. We look bad, but they're not saying it would help our economies. It would help our citizenry. It would improve anything. They're saying we can't get reelected. It's hurting us that we can't get this passed. Still hasn't helped. And then, of course, Representative Smith acknowledged that these dynamics are going to shift next year probably because the cap is going to automatically expire along with everything else in the Tax Cut and Job Act, and we will revert back to the law as it was on January 1st, 2026, as it was on December 31st, 2017. Of course, that's if they take no action, right? We have no idea what will or won't happen here. All right, so I mentioned that the 1099-K has an update. It provides resources for taxpayers during filing season. They issued a revised FAQ. Now, they just did a revised FAQ December 28th, 2022, and they did a really good job. They talked about, I got an overpayment, I got a surprise. I told you the story. I sold my daughter's French horn for over $600. I was expecting a 1099-K, and of course, we never got the changed laws. And no, I'm not an evil person for selling her French horn. She told me to sell it. Gave her the money. I'm a nice man. So one of the things I want to do, the FAQs, don't forget now, are actually saved in the Federal Register in the public record. So because we can rely on them a little bit. So we can rely on them as authority, very low in the echelon, but we can rely on them. So they're published and they're kept. So I wanted to go back and compare the two. I'm thinking they've given us better explanations. It's now at 14 pages. I haven't had time to look. There could be an hour of CE in there at some point. So I don't know. It does say there's more clarity and that talks about who's supposed to be filing these things. So maybe we'll see a class on this. I don't know yet. This is awesome. So awesome, baby. Corporate jets are something that I always wanted to explore, the taxation of corporate planes. And I really got interested in it when I worked at Weiser, and we had a client who forgot to tell us they bought a corporate jet. They formed a new corporation, bought a corporate jet, and put it on there. And of course, it was foreign owned. So this was like 4 or 5 years into it. And why were they looking for this? Because they were going to sell the jet. So all of a sudden, we had 5 or 6 years worth of returns. Form 5472 hadn't been filed. We were looking at a 6-year penalty. And all they wanted to know is how fast we could get it done. And I'm thinking, that's a $125,000 penalty you don't care about. I wish I was that wealthy, but they had their own 747 for personal use. So it was very interesting. So the IRS announced that they're going to use some of the Inflation Reduction Act funds to launch new audits of large companies' jets. I'm going to tell you, I think there's 2 reasons they're doing this, and it doesn't have to do with the jets. I'm going to get to that in a minute. The motivation is the IRS believes there's not enough effective record keeping. So remember, if my billionaire musician girlfriend flies in to watch me do a tax audit, right? Because you're not going to fly in and watch me play football. She flies in to watch me do a tax audit. That might be personal use. And then if at the end of the audit, we get on the plane and she's got to go to work in Sydney, but we're going to fly there. So to go to the zoo and whatever else. Yeah, technically my part, I'm supposed to write a check. So if that's $100,000 flight for my share, I got to write a check for that or get a W-2 for it. And that could get pricey. But they think there's not good record keeping. Now, I find that funny because how hard is it to write down who was on the plane? There's that episode with that Steven Spielberg type character in Law and Order where they found out who was on the plane very quickly. So they looked at some documents. So anyway, the IRS believes that some companies are taking business deductions for the aircraft without thoroughly carving out personal use. You think, oh my goodness, people can't keep an auto log. Do you think they're keeping and they'll tell you the truth about it. Do you think they're doing a good job with their corporate owned jet? I don't think so. But some of these statistics are very interesting. They think there's a lot of money to claw back. There are 10,000 corporate jets that operate in the United States. I'll let that sink in. That's a lot of planes. The high value of the planes, just the sheer value of the plane and the cost to run it, when you apportion personal use to it, there's just huge numbers. All you got to do is catch somebody. Hey, that was a $100,000 flight. Here's your bill for $40,000 plus interest and penalty. It's mind-boggling what they're going to do here. The examinations are going to begin now. There's an initial group, according to the commissioner, because he talked about this personally, of 3 to 4 dozen fresh audits. Why are they doing this? Well, first of all, Treasury Secretary Yellen, of all people, has continuously said in public that to the extent they use Inflation Reduction Act money to do enforcement work, they will not increase the number of audits percentage-wise done on those earning under $400,000 now than before the pandemic, right? So they're saying if we did a lousy 1% of regular people, we're not going to increase that. So part of what they're going to need to do, first of all, is go after the wealthy, the higher income people, or things like this. And second, they got to be really public about it. So they're going to be really noisy and really public about this stuff. There's just no way around it, and that's what they're doing. 36 to 48 audits. Now, the audits are going to focus on the highest risk corporations and complex partnerships. Mark Cuban has several planes, flies around for business, flies around for his basketball team. You think the family ever hops on the plane with him? It's going to be very interesting to see what they do here. Commissioner Werfel was in a press call, and he was doing the talking. So they finally, took the gag off Danny, right? They're going to let him talk. He thinks the IRS is going to then further shift the audits to individuals if needed. Of course they are, because they're going to have income imputed. They're going to double tax. Income imputed from the corporation, income's then going to be taxed on the individual. And here's a quote. We are concerned people are using business aircraft for personal use. Is that him and the auditors, him in Congress, him and the mouse in his pocket? There wasn't enough context who we is. Then taking the business deduction they might not be fully entitled to. Okay? Personal use of corporate jets and other aircraft by executives and others have personal and business tax implications. And it's a complex area where IRS work had been stretched thin. This again says this is a complex area of law and record keeping can be challenging. My prediction, I'm not an attorney, that is going to be the opening argument in every appeal, every tax court case, and every criminal tax court case that involves a corporate jet. Commissioner Werfel acknowledged publicly, it's complex. I tried. You got to give me an abatement. I can see a big enough person trying to get him to come in and talk about this, right? You send him a subpoena. Material witness warrant, baby. We need you. That might have been a misspeak, right? Let's see how that plays out. I also watched too much Law and Order. So a couple of more takeaways here, because they did make a big deal of this, which is why my personal belief is a lot of this is showmanship and not about the revenue, although revenue is going to be very high on these things, right? All they got to do, because there's got to be at least some missed, intentional or not, personal use. So part 2 to this, I said they were looking because of the Inflation Reduction Act, but they're going to utilize advanced analytics, and I'm going to tell you more about what I think they're going to do. to conduct the audits in an area described as under scrutinized. So what are they going to do? give me a second to talk about Jack and Taylor in a minute. All right. So they also further talk here about these large dollar audits for these wealthy people, how many hours they take, but they will return the biggest bang for the buck because there's lots of room here to catch people. He backed, if you look at the third paragraph, right, for audits closed in the fiscal between 12 and 22, the highest income audits averaged 44 hours per audit compared to about 22 for other audits. Officials think that the highest income returns require many more audit hours because they're more complex. We agree. Also, these are people with 6 hours of accounting credits. That's all most TCOs and revenue agents have. And some of this stuff gets more complex. And personally, I think the service should hire folks that are trained on more complex issues. Maybe they will. Last paragraph, he backpedaled a little bit. IRS does not, this is testimony before House Ways and Means. IRS does not take the overall position that all big corporations and well-off individuals, no definition of well-off, are non-compliant or are purposefully engaging in evasive behaviors. Go back to his comment. This is a complex area where record keeping is challenging, right? So this should be fun. All right. I want to bring this back. It's so funny. I said, what week was this? I thought it was 2 weeks ago. It turns out that it was 3 weeks ago. Groundhog's Day. So Holy Groundhog's Day, going back reminiscent of a class Ellie did during the pandemic on Tax and Groundhog Day or whatever she called it. So when we were doing weekly updates, the precursor program to this. So I will remind you, I was just going to point to the screen like you can, see me. But these are their numbers on their projection of what the staffing increase will be. They expect revenue agents will have a net staffing increase of 55% this year. You see the opening at the beginning, end of last year, 8,559 people. After new people hired, 1,100 people retiring, staffing goal of 13,000. They expect I did the math, a 55% increase. So, interesting comments. Mr. Wonderful takes American Airlines for personal use. At least some of it, right? So we can document it. If you need copies of this, if there's anything not in the handouts that you want, send me an email specifically what you're looking for. I will either send you links to my source, or if I've downloaded stuff and it's not in the handouts, I'll get that to you too. All right. But yeah, there is a complete, Katie's right. There's a complete copy of the handouts as well in there. At least there should be. So Taylor and Jack, right? Who are Taylor and Jack? Well, you know who Taylor Swift is. Even I know who Taylor Swift is, age 34, and I live under a rock, right? 4 Grammy Awards for Album of the Year, first artist to ever do that. Although I think that's unfair because a local fellow here by the name of Jimmy Sturr has like 21 albums of the year. Of course, that's in the polka category, but what can I say? That's Jimmy. All right. So Taylor has a problem. She has stalkers and she has a lot of legitimate issues, right? But this is what happens when you put yourself out there. So she has a problem with a 21-year-old gentleman by the name of Jack Sweeney, who's a junior at University of Central Florida. And Jack tracks corporate jets, privately owned corporate jets, using data available from the FAA and a whole bunch of people out there who have a little transponder reader, a BA item, I don't know what it's called, but you can buy this little thing for about $150, and it reads transponders, just like on Star Trek when they read which starship it is, right, that's out there. Well, this thing tells you the beacon, and you can look up the locator code. Anyway, this whole network of people, they're tracking whose jet is where, mostly because they have nothing else to do and no friends, apparently. Anyway, he tracks the takeoff and landings of corporate jets, which on the one hand is kind of cool. He's also using publicly available data. And I'm going to tie this back to taxes in a minute because some of you have left me and I'm so disappointed when people leave. But The FAA also allows, this is where he's getting into trouble. The FAA also allows people to put in a request to mask the data from the public, right? Please take me out of the Freedom of Information Act request. And apparently they're doing that with Taylor Swift's data. But yet this guy is still getting it through his network of private people. Anyway, he got a cease and desist letter. They're threatening to sue him. And, his attorney responded back with, this is kind of publicly available stuff. And they replied back, you're putting our client's life in danger. I'm sure she has a tax deductible security detail. Anyway, it's interesting. This kid was also a target of Mr. Musk. Elon Musk doesn't like him either. And what did he do? He kicked him off of X. X, the formerly known as Twitter, not X, the narcotic, formerly known as ecstasy. But here's where I think the AI, let's tie this back to Mr. Warfel saying that they were going to use analytics. The FAA has the data of where the jets are. Well, if Taylor is in location A and then she's in location B in Kansas City with her publicly admitted boyfriend watching him play sports, then they hop on the plane after a game and fly somewhere else. Boy, if there's a lot of that going on, and we can publicly see it because over a 2-day period, she goes from South America to Kansas City to Argentina. I think it was more than, or to Australia. It's more than a 2-day period. At least part of the time, Mr. Kelsey's with her. I'm all for them getting their privacy, and this isn't, a lot of this is unfair. However, it's right there before them without even using the AI. Now they're going to dig into the AI, probably compare it to news stories, which would be easy enough to do. Bing, 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 right? They know who the 10,000 corporate jets are. They know where people are traveling. They're going to tie this all together with the analytics. And these aren't going to be people anyone is sorry for that the IRS is examining them. So this is going to be very interesting. It's going to be kind of low cost, and we're going to see what the results are. So kind of interesting to me anyway. Parts of Maine and West Virginia have been affected by the severe storms from last fall and last September and last December. So people in these areas now have additional time to file. We are adding to our review checklist. Have you checked the due date? Is this person in a disaster area? And that would be a neat tool to be able to put a zip code in. Maybe one of these days I'll develop that tool with someone, right? Where we pull the data from the IRS website where you can look up all the disaster areas now and have it pull and tell you both for federal and state purposes what the due date is. And then sell it to one of our tax software providers to integrate it into their software. But I digress. Those of you that do international work, I'm not going to keep you tied up here, but 1042-S is a document you file if you have foreign payments subject to withholding, payments to foreign folks. Anyway, they have a data integrity tool available on the website, which, okay, big deal. But what I thought was neat about it was that the last item, the use of this tool or any other available tool that reviews information returns for potential errors prior to submission may be considered in requests for penalty relief. There's an error, I get a penalty. Hey, I ran it through your tool, a third-party tool. We use Avalara, which does data checks. Save a screenshot, right? I did this. So you shouldn't penalize me if it's something related to it. You file it late, you're not going to get any help. But data mismatches or something like that, interesting to know that they're going to accept this. It would also be interesting if I used any other tool. Can I make the argument based on this? So you can throw anything into a letter. Interest rates are going to remain the same for the second quarter of 2024. Remember, interest rates are a quarter behind. They could cut the federal funds rate tomorrow. We're married to this rate for the next quarter. Big number is 8% for overpayments, 8% for underpayments for individuals. Those are the big numbers we see. This is the number people ask us. When we used to tell them 3%, people used to be like, oh, that's nothing. Well, inflation was, 1.5%. So it was a lot, but they didn't care because they listened to the sheer number. Now, today they listen to 8%. I don't know. That wasn't such a bad number when inflation was 10. But anyway, so for your needs and talking to your clients, 8%. The IRS has released not one, but two public service announcements / handouts. They are titled as publications related to the Queen Vehicle Credit Transfer. So if I buy an automobile that has a new car with a $7,500 energy credit, used car with a $4,000 energy credit, remember that in 2024 I can transfer that to the dealer. That could help me get a lower payment. That could help me get a down payment that I don't have, and it also avoids waiting a whole year. That money is worth more to me now than waiting to get it in my refund next year. Where I predict this is going to go is similar to Form 8962. If you remember, originally you filed a return without the 8962. It took 18 months, 2 years before you got it wasn't a CP 2000, but it was a similar notice that said, hey, there's a problem with your return. Then we got to the point where we filed it and we got a notice that said we've put your return into suspense until you send us an 8962 and reconcile this stuff. Well, nowadays, what happens? It rejects, right? It only took a decade, right? We started 1095 A comes out in 2013 with the passage of the Affordable Care Act. Only takes a decade or so before we're just not going to process the e-filed return at all until we have the missing information. I think the same thing is going to happen here. They're going to check the database. They're going to see that someone on the return transferred a credit, and they're going to want the reconciliation paperwork. Oh, this is funny. Yvette says, just had a reject today for a VIN mismatch on a Queen Vehicle purchase credit. Well, there you go. I hope it was a real mismatch and not fraud. All right. So what's going to go on here? There's some concerns here. So you have to remember, when the buyer transfers the credit, the dealer is not required to verify the buyer's income. The dealers are required to disclose information like what the limits are. Dealers are not required to repay the advance if the buyer exceeds the income limits, because the buyer is probably required to do it. We gave you in the handouts gave you in the handouts a copy of Form 58 Publication 5899. I also gave you a link to it in the resources page. This is the information that you, the taxpayer, are supposed to provide to the dealer. And Form 5900 is important information for consumers that are transferring Queen vehicles. We're going to, again, I haven't read these fully. We're probably going to have these available in the office to give to clients who call asking for information, right? We're going to say, well, why don't you start here? Here's what the government is telling people. And then call me if you have any questions, and maybe we'll talk through it together. The buyer has to attest to the dealer in writing they expect to qualify for the credit. Buyers aren't eligible if their modified AGI exceeds the thresholds you see below. For a new car, $300,000 for a married couple. For a used car, $150,000. So it's very interesting who they're targeting here to buy used cars. If the buyer's modified AGI exceeds the limitations or they are otherwise ineligible, the buyer will be required to repay the IRS the amount received for transferring the tax credit when the buyer files their return. Now, I haven't done any reading on that, but I wonder, is that going to be considered a tax? Or will it be considered like the premium tax credit, something that the IRS can collect via offset, but for which they don't have lien or levy authority? I have not read that through yet, so I don't know. But I'll let you know. Could be a fabulous class this summer. Speaking of the premium tax credit, the IRS revised the FAQ. It replaces the FAQ from 2022. And again, in 2022, we were talking about pandemic-related issues. Pandemic's over, so now we're going to be addressing back to what we were probably prior to the pandemic. Because remember, there were issues during the pandemic. We suspended income checking and a number of other things to give. We had a year where the credit was fully refundable. A number of things, right, that have gone away just with the passage of time. Without boring you with the details, we have additional student loan relief coming from President Biden through executive order. And I just want to remind you, there's another 150,000 people are going to have their debt forgiven. So if you get the phone rings from clients, remember the American Rescue Plan Act of 2021 said that for a given student loan for any program, any reason between 2021 and 2025 is not going to be subject to income tax. can argue that's unfair or any such thing. But this was because the Democrats did intend to offer a lot of student loan relief. That was President Biden's campaign promise, was $50,000. That didn't happen, but he is getting closer. So basically, folks who have paid for 10 or more years under this SAVE plan, Savings on a Valuable Education, these are all small loans. So there is an argument here that if I had a $12,000 student loan, $12,000 or less, and 10 years later I'm still paying on it, yeah, maybe there's an argument here that we should be doing something about that loan for these folks, whatever politics aside, right? For those of you that requested this, you can actually remove the AI that's in the Facebook groups, and we did that for you today. So for those of you that wanted me to remove it, I removed it. Took a little figuring out, but it's gone. I want to thank everyone for coming today. Don't forget about our Facebook group. Don't forget about the YouTube channel. You'll be able to watch this program on replay and any other program that we've done in the recent past, right? These free weekly programs are available there. So have a great weekend. I'll be working. I hope you won't be. Thank you again.